Welcome to Talk Tickers. Today we're doing a deep dive into Snowflake's Q2 fiscal year 2026 earnings. It was a quarter that definitely got the market excited. We'll unpack the numbers, the strategy, and try to figure out, is Snowflake really becoming the AI data platform? Or just catching the wave?
It's a great question. They're right at that tricky spot, aren't they? Foundational data meets fast-moving AI. This report gives us a good look at how they're turning that AI talk into, actual business results.
Exactly. So let's jump right in because honestly, Snowflake didn't just meet expectations, they kind of blew past them. A really strong second quarter, beating on both revenue and earnings, showcasing growth, yes, but also operational control.
Oh yeah, the market definitely noticed that after hours jump. And the numbers themselves, they paint a pretty clear picture. Non-GAAP EPS, for example, $0.35. That's a solid 8 cents above consensus. Tells you their efficiency efforts are, really paying off.
And just quickly, that non-GAAP means they've adjusted out some things like stock compensation, right? Do you have a clear operational view?
That's the idea, yes. A cleaner look at core profitability.
Okay, and the top line, revenue.
Impressive. $1.14 billion total revenue. Beat estimates easily. And that's up 32% year over year.
Wow, 32%. That's not just growth. That feels like acceleration.
It really does. And critically, their product revenue, that's their core business, their bread and butter, that also jumped 32% year over year, hit $1.090 billion.
So the core offering is really landing with customers.
Seems so. And they kept margins healthy too. Non-GAAP product gross margin, 76%. Non-GAAP operating margin at 11%. Solid numbers.
And free cash flow. Always important for investors.
Looking decent. Adjusted FCF hit about $67.8 million. That's a 6% margin, so managing cash while still investing.
Now, something that always catches my eye is RPO remaining performance obligations. What did that look like?
Robust is the word they used, and it fits. $6.9 billion, that's up 33% year over year.
So $6.9 billion.
Right.
That signals a strong pipeline of future contracted revenue, right?
Generally, yes. It points to strong long-term commitments, and that ties into their net revenue retention, or NRR.
Ah, yes, NRR. What was that?
Very healthy. 125%.
125. So existing customers are spending 25% more on average than last year. That's huge for expansion.
It really is. Shows they're not just landing customers, they're expanding them significantly.
Speaking of landing customers, any growth there?
Yep. Added 533 new customers overall. That includes 15 from the Global 200 list. And here's a record for them. 50 customers crossed that $1 million annual spend threshold in the quarter.
50 in one quarter. Wow. How many does that bring the total to?
Takes the total to 654 customers spending over $1 million a year. Strong enterprise traction.
Okay, impressive fundamentals. But let's talk AI. That's the narrative everyone's focused on. What are the metrics telling us there?
This is where it gets really interesting, I think. Over 6,100 accounts actively use their AI features every week. Every week.
6,000. Okay, that's a solid number. What else?
Even more telling, maybe? AI apparently influenced nearly 50% of the new customer wins in Q2.
Half. So AI isn't just an add-on, it's actually drawing new business in the door.
Exactly. And it now powers about 25%, a quarter, of all the use cases deployed on the platform. This feels like it's moving past experimentation into, actual production workloads for a lot of customers.
Okay, those numbers are definitely compelling. But how? What's actually driving this? It can't just be hype. What are customers doing with Snowflake AI?
Right. It's about making it practical for enterprises. A big piece is Snowflake Intelligence, which just went into public preview. It lets you use natural language, just talk to your data and build intelligent agents.
Okay, like chatbots for your own company data.
Sort of, but more integrated. They mentioned Cambia Health, using it for Medicare member outcomes, Duck Creek Technologies for internal efficiency, finance, sales, HR. These are real business problems being solved, not just tech demos. It cuts down the usual friction of deploying AI.
And what about Cortex AI SQL? That sounds potentially huge.
It really is a bit of a game changer, I think. It lets you call AI models directly using SQL right inside Snowflake.
So no need to move data out to some separate AI tool and then back again.
Exactly. Eliminates that whole data movement headache, the cost, the latency, the security worries. It's a massive simplification.
And are they locking people into specific models?
No, that's key. They're partnering widely, integrating models from OpenAI, including their new open source, and the upcoming GPT-5 Plus models from Anthropic, giving customers choice right within Cortex.
So the ease of use, the quick value, the built-in governance. That's why it's catching on so fast without needing some huge specialized AI sales force.
That seems to be the core of it. They're hitting the major pain points, security, compliance, data movement that often stall big AI projects. Customers see the immediate value.
Makes sense. But it's not just AI, right? Their pace of general product innovation seems relentless.
Oh, absolutely. They said they launched around 250 capabilities into general availability just in the first half of this fiscal year.
250? How do they even manage that pace?
It suggests a really dialed-in product roadmap and very efficient R&D. And these aren't just tiny tweaks. They launched Gen 2 warehouses, for instance. Promise up to 2x faster performance, more efficiency, automatically optimizing resources without costing more. That's a big deal for existing customers.
And for developers.
Snowflake Postgres, that's significant. Offering enterprise-grade PostgreSQL so you can build AI apps directly in the platform. They expect a preview in the next couple of months, and apparently customer interest is already really high. Shows they're serious about developers.
They're also pushing into data integration more heavily.
Yes, with Snowflake OpenFlow. That builds on their Data Bolo acquisition. It expands how you get data in structured, unstructured batch streaming. And crucially, it now supports change data capture, or CDC, from Oracle databases.
Oracle CDC.
Yeah.
That opens up a lot of legacy systems. Big market.
Huge. They mentioned the data integration market being around $17 billion. So tapping into that is a major opportunity.
And what about Spark integration? Lots of companies use Apache Spark.
Another key move. Snowpark Connect for Apache Spark went into public preview in July. It lets customers run their existing Spark code and workloads directly on Snowflake's engine.
Ah, so less need to manage separate Spark clusters. Less data shuffling for AI and ETL.
Precisely. Leverage familiar Spark skills in code, but get Snowflake's performance and governance benefits. It's about meeting customers where they are, technically speaking.
Okay, let's circle back to that 125% NRR, the net revenue retention. That really speaks to enterprise expansion.
It does. It shows those big existing customers are finding more and more workloads to migrate onto Snowflake, driving that spend up.
Management addressed customer optimization efforts too, didn't they?
Yeah.
Just saying it's normal.
Yeah, they framed it as a normal, ongoing process, not something that's negatively skewing the NRR trend in an unhealthy way, just businesses being efficient.
And the data sharing aspect seems important too. What percentage of customers are doing that now?
40%. 40. That's creating some powerful network effects.
Like a secure marketplace or sharing hub for enterprise data?
Kind of, yeah. It breaks down silos between companies in a governed way. Plus, they highlighted over 1,200 accounts using Apache Iceberg.
Open table format. Important for avoiding lock-in.
Exactly. It shows leadership in open standards. It all ties back to this idea that data modernization is step one for AI. Snowflake's pitch is they make your data AI-ready, accessible, governed. They even have tools like SnowConvert AI to speed up migrations using AI itself.
And strategically, how are they going after this opportunity? Any shifts in sales and marketing?
Big investments there. They added 364 sales and marketing hires in Q2 alone.
364, that's a lot.
It's their biggest 6 months of hiring in S&M in 2 years, they said. Follows some performance management earlier. It signals real confidence in the pipeline and the need to scale up to capture the demand. Focuses on articulating business value, not just cost savings.
They're putting their money where their mouth is, basically.
It looks like it. And their multi-cloud strategy seems to be paying off, too.
Which cloud is growing fastest for them?
Microsoft Azure grew 40% year over year on Azure.
40% on Azure. Why the strength there?
They pointing to better sales alignment with Microsoft's field teams, especially in Europe, Middle East, Africa, and collaborations on products like OneLake, Office Copilot, Power BI. It shows the multi-cloud approach works, it's a hedge, and it meets customers wherever their data happens to live.
So pulling it all together, in a crowded market with hyperscalers like AWS, Azure, Google, and other specialized tools, how does Snowflake stand out? What's the core differentiator now?
They position themselves as the best AI data platform, and it seems to boil down to 3 things. Ease of use, making complex stuff simple, connectedness, preventing silos, enabling that secure data sharing, and trustworthiness, solid governance, reducing AI errors or hallucinations.
Ease, connection, trust.
Right. Those qualities, plus that relentless innovation case we talked about, that's their edge against the giants and the point solutions. Having it all integrated, governed, and AI-ready in one place is a powerful story for big companies.
Okay, let's shift to the outlook. What are they telling investors to expect?
Pretty strong guidance. They raised the full-year fiscal 26 product revenue forecast to $4.395 billion.
$4.395 billion.
What kind of growth is that?
Represents 27% year-over-year growth for the full year. And for Q3 specifically, they're projecting product revenue between $1.125 billion and $1.130 billion. So momentum continues.
And margins, are they sacrificing profitability for this growth?
They're aiming for balance, expecting a full-year non-GAAP operating margin of 9%, non-GAAP product gross profit around 75%, and adjusted free cash flow margin of 25%. So still investing aggressively, but keeping an eye on efficiency.
Anything else investors should watch?
Well, the search for a new CFO is still ongoing. They said they'll announce when they have firm details. That's a key role, so the market will be watching that appointment closely.
Right. A steady hand at the financial helm is important at this scale.
Definitely.
So the bigger picture here seems to be Snowflake solidifying its narrative, moving from just expensive growth to being a core scaled AI data platform. I think that's right. The product velocity, the enterprise wins, the AI adoption metrics, it all points towards compounding growth, durable growth.
What should people be watching in Q3 then?
Keep an eye on the consumption trends, obviously. See how that Snowpark Connect for Spark adoption goes. And what new features they roll out for Cortex AI. The macro story is clear. Enterprises are prioritizing AI and data infrastructure. Snowflake looks very, very well positioned to capture a big slice of that spending.
All right, let's pivot slightly. We've covered the results, the strategy. Now for our not financial advice segment. If you, our listener, were thinking about market plays around Snowflake after this quarter, what kind of ideas, maybe plausible, maybe a bit out there, come to mind?
Okay, investment committee hats on. Remember, purely hypothetical, not actual advice. Given the strong quarter and how the market reacted, validating that AI story, a couple of thoughts. Idea one, the synthetic long capitalizer for capitalizing on this immediate momentum.
Okay, break that down. Synthetic long.
Yeah, you use options to mimic owning the stock. Buy deep in the money calls options that are already profitable and simultaneously sell some short-dated puts.
Why do that instead of just buying the stock?
It lets you capture that upward price movement, the positive delta, but also potentially profit from selling options premium, the implied volatility. We saw the stock jump 12-13% after earnings, but the options market only implied about a 10% move beforehand. So there might have been an edge selling that volatility. You get exposure, maybe cheaper.
Interesting. Capturing the move while potentially offsetting some cost by selling volatility. What's the audacious idea?
Idea two. The AI decoupling play, this is longer term, requires more conviction. You could set up a long-term call spread on Snowflake, maybe buy the fiscal $27 $250 call and sell the fiscal $27 $350 call. Defines your risk and reward.
Okay, bullish on Snowflake long-term. What's the kicker?
The kicker is you potentially finance part of that Snowflake spread by simultaneously shorting stock in a different, maybe smaller SaaS company, specifically one that isn't showing clear AI traction or isn't articulating its AI strategy well.
Ah, the decoupling idea. Betting that the market increasingly rewards clear AI winners like Snowflake and punishes the laggards.
Exactly. Snowflake's metrics on AI adoption, AI influencing new logos that creates this flight to quality narrative in AI infrastructure. Companies that can't show similar results will likely face pressure as budgets consolidate. This pair trade tries to capture that divergence, bets on Snowflake's AI strength and potential weakness elsewhere.
A bold play, betting on divergence in the AI space. So wrapping up, Snowflake really put up an exceptional Q2 for fiscal 26. Beat expectations, raised guidance. The strong product revenue growth, combined with that accelerating AI adoption, really does seem to position them right at the heart of the enterprise AI shift.
Yeah, the focus on innovation, the multi-cloud play, the operational discipline, it paints a picture of a company executing well with a multi-year growth path ahead.
As companies keep shifting towards needing AI-ready data, the crucial question becomes, who do you trust with that foundation?
It's not just about the flashiest AI model, right? It's about preparing the data, governing it, making it trustworthy. Snowflake's focus there on trust and seamless integration could be their biggest long-term advantage as this whole AI landscape matures.
A final thought to leave you with. Remember, everything we've discussed here on Talk Tickers is for informational purposes. It's definitely not financial advice. Always do your own thorough research before making any investment decisions. Thanks for tuning in for this deep dive. We look forward to bringing you more market analysis next time.